Good morning, everybody. Earlier today, my office put out our overview of the May revision. I want to thank all of my colleagues in the office, our analytical staff, support staff, for their hard work in getting the document out when we did. I want to particularly thank Jason Sisney, who's right over here. Most of you know Jason. He's sort of spearheaded our efforts on the document. We do two basic things in this overview. We update our economic and revenue forecast, and then we provide comments on the governor's major proposals that came out in the May revision. So it's a chance to give the legislature our initial reactions and sort of, big picture comments on the budget proposal. Let me just make a few comments and we'll throw it open to questions. First of all, on revenues. The administration came down significantly in both the current year and the budget year. Our office, in our forecast, we also made changes to our individual taxes. For example, we came down significantly on the corporate tax. We're actually slightly above the administration, however. We came up on personal income taxes in the budget year, 2012-13, primarily because we had new information about capital gains and losses that we just received from the Franchise Tax Board a few weeks ago. However, on net, because the administration brought their baseline numbers down so significantly, we are very close to the administration in both the current year, the fiscal year we're now in, that ends this June 30th, and for the budget year. The actual numbers are for 2011-12, we're 158 million below the administration, and for 2012-13, we're 392 million below. Those, for revenue forecasting purposes, it's almost rounding error. So we're very, very similar now to the administration. Now, the fact that we're similar in our estimates does not mean, however, that there isn't still huge variability around both of our sets of numbers. And we spend quite a bit of time in the document talking about what some of those factors are and why revenues could vary up or down by billions of dollars. And particularly this year, when we have so much uncertainty at the federal level on what's going to happen with tax cuts, what's going to happen with sequestration. But on top of that, we've got Facebook, we've got the capital gains issue just in general. There's a lot going on, and so there's a lot of uncertainty surrounding both sets of our numbers. And the fact that we're similar does not mean that that variability has any way diminished or gone away. As far as the problem definition, the governor had identified a $15.7 billion problem, and then he adds another billion in solutions in order to fund a reserve. For the most part, we think that the governor's calculation and description of the budget problem is reasonable. We had one significant exception, and that relates to redevelopment. The administration had brought down its estimates of what we were going to get in so-called tax increment revenues in both the current and budget year. He had brought it down from $2.1 billion for both years in January down to $1.8 billion. Unfortunately, we think that those amounts could actually be considerably less than even the $1.8 billion. Our best estimates, and again, you all know what's happening with redevelopment. Numbers are still being reported as we close out these agencies, so there's a lot of uncertainty around the numbers. Our best guess is that we would get about $900 million in the 2-year period, or roughly half of what the administration is estimating. So if that were true, that would increase the budget problem by a comparable amount. Now, also related to redevelopment is on the solution side for the governor. He assumes that we will get $1.5 billion in redevelopment assets that we will be able to score in 2012-13. This, again, there's lots of uncertainty around this number because this information is now being reported to the counties, to the state, and we have to do audits and checks and clawbacks and all sorts of things. So it is possible that we could get that amount in 12-13, the 1.5, or it's net of 100 million that schools get to keep, so 1.4 in benefit to the state, that we could get that amount. The problem is that with the uncertainty around it, even though we could get a little more, we think it's probably more likely that we could get less in 12-13. So that we would view as, in his solutions, is a risk certainly associated with those monies. As I said in the document, we comment on all of the major proposals that the governor has made in the May revision, and we provide, in some cases, alternatives. A couple of days ago, we put out a document on the May revisions proposal regarding corrections, where we offer alternatives for the legislature. And we do that throughout the document. But I want to really highlight what we talk about with regard to Prop 98. As always, 98 is very complex with the different revenue numbers floating around with the tax initiative. There are various rebenchings, there's legal issues. So it's always very complicated, and this year is no exception. You do get this situation that probably most of you have already heard about, where you have revenues falling dramatically and yet the guarantee goes up. And part of that is due, as the governor noted, because of the year-to-year changes. It does trigger increasing amounts of what we call maintenance factor. But it's also due to the administration's way of paying back what's called maintenance factor. And I want to spend just a minute on this. Hopefully it won't put you to sleep here. But under Test 2, which is just year-to-year growth in the Proposition 98 amount, if you go below a Test 2 amount in a year, you owe what is called, not owe, but you set up what you call as a maintenance factor. And the purpose behind this is simply to get you back up over time to the point you would have been had you not gone below your Test 2 amount. It's kind of a catch-up amount. Now, the administration is, in their calculations, are assuming that the maintenance factor amount, this $2.9 billion, where there's no dispute about, would be made on top of the Test 1 calculation. We believe it's more appropriate and reasonable to put it on top of the Test 2. Now, the difference is the Test 1 amount is considerably higher than the Test 2 amount, and so they get a much larger increase in overall Proposition 98 spending. If you were to put it on the Test 2 amount, kind of this alternative approach, which again we think is historically the way that we've always thought about it and the way that makes the most sense in the context of Proposition 98, you would have a $1.7 billion difference. That is, instead of going up by $1.2 billion, you would actually go down, the guarantee would go down by $500 million. And that's a very large change, but again, at that point though, it's a little more intuitive, right? Revenues drop considerably, the guarantee falls by a little bit from where you were in January.
Who makes that decision? The legislature will make that decision?
The legislature can certainly make that decision.
So they have the option of picking basically either one of those methodologies?
I believe they do. And again, I think we can make a good case that this is the most consistent way in the way we treat the creation of the maintenance factor and the way we treat the paying off of the maintenance factor. Now, even under our approach, schools get a very large year-to-year increase. It would grow about $4.3 billion. That's less, though, than what the governor's calculation of just over $6 billion. Now, if the legislature were to take this approach in the calculation of the 98 total, we think it could, we've developed in effect a package, an alternative package for their spending. And what we've done is, by not paying down as many deferrals and using some one-time monies, we end up with the same amount of programmatic spending for schools in 2012-13 as the governor's package. So that is, in the near term, for the coming budget year, schools would end up in almost exactly the same place as under the governor's. But the important thing is, you would have freed up this $1.9 billion that could be used on other parts, all of the non-98 parts of the budget. So they wouldn't have to take the same level of cuts that the governor is proposing in those areas of the budget.
So, just to make sure I understand, so under
Sure.
this calculation of Prop 98, the governor is saying there would be a $6 billion increase.
Yes.
But under this other calculation that could be used, there could be just a $4.3 billion increase. But classroom spending could remain even throughout both things.
They would be roughly the same, yes.
Because the extra money would be used for like things like deferrals and
In other words,
old payments.
It's not like it has no effects in the out years. The governor would have paid down more of the deferrals, and that's a good thing. We're not saying it isn't. We would still pay down deferrals, just not as much as under the governor. But that doesn't affect programmatic spending.
In your earlier analysis, which also included the governor's first take on his tax plan, you had per pupil spending, programmatic per pupil spending, essentially flat, actually down a couple of dollars.
Roughly, yes.
Where are you now on that?
I think it's about the same place. Jan, help me out.
Yes, it remains virtually flat because he designates most of the increase in the guarantee to additional deferral paydowns. which help districts from a cash perspective, but not a program perspective in general.
Let me make sure I understand. Sure. Under your proposal, approximately $4 billion or so would still, the schools would still get $4 billion more.
The guarantee would go up by 4.3.
Okay, so if voters don't pass the tax increases and the trigger is in effect by some $4 billion or so, still school funding, Prop 98 funding stays the same. Schools will get the same amount of money.
Well, no, we also offer an alternative trigger proposal.
Oh, okay, because
You're under the trigger now, I think, right?
yeah, I'm under the trigger.
Yeah, and I was going to finish up with that.
Okay.
But so let me just briefly talk about that. We also offer what would happen, a package that the legislature could adopt for the trigger purposes. And this also differs from the governor. We think it has several advantages. You would not have to do the whole shifting debt service into the guarantee, which I think is problematic at best, legally suspect. So you would not have to do that. We actually, the schools under our alternative trigger plan would end up with $1.3 billion more, or $1.3 billion less in cuts, however you want to look at it. But they would be better off under our alternative trigger plan. Now, the downside, however, is that you would have to find $1.3 billion in the rest of the budget in order to still get the same amount of total savings under the governor's trigger proposal. So we trade off slightly higher spending for schools, but without having to do the debt service shift, and you get fewer deferral paydowns again. But you would have to make other cuts in other parts of the budget.
It may be a mark of the times that you can refer to $1.3 billion as slightly more.
Well, these are large amounts we're dealing with.
So the plan would still have to require some spending cuts, the 1.3
Yes.
billion. However, if the triggers are pulled, schools will not be hurt as badly.
Yes, that's true.
But other programs would.
Exactly. Now, I guess you could take it that since you would have this money available from our sort of base program where you wouldn't be cutting as much, you had this 1.9 billion not to take reductions there, you could argue maybe then those programs that were spared cuts under the kind of base budget might have to be exposed to the trigger. But that is a difficult trade-off. So we offer this alternative, both kind of base education budget and the trigger, as just something for the legislature to consider. I mean, they're facing some really tough choices, even with the assumption about the passage of the revenues under the governor's tax proposal. They're still having to make some very tough programmatic reductions in other parts of the budget. So we offer this to them as first of all, because we think this is the way that you should interpret the maintenance factor. We think it's more logical, consistent with the historical way that we viewed it. And so we would recommend this regardless. But it does have the benefit of making their job a little bit easier in tackling their complete budget package.
Do you make recommendations on what cuts would go into effect to spare schools from having to be triggered so much?
No, and again, I think the reason is what I just mentioned. Since we don't know what the legislature might otherwise do with the savings in effect from the budget, it's kind of hard for us then to say, well, here's where you should focus the cuts under the trigger to the non-98 part of the budget.
Mac, are you convinced that you have to do triggers now?
Well, we've always said you don't have to do. You could just pass a budget assuming the revenues aren't there and then plan for them if they come in.
Or could you plan for them, could you assume they will be there and not do the triggers until afterwards?
Well, I think that would be the worst possible situation. Then you might have problems with your cash selling your RANs.
Mac, you mentioned there are some one-time problems that are okay to use one-time solutions.
Mm-hmm.
What are some of those one-time problems that
Well, I think what we tried to link up is that you have, at the end of this year, the administration is estimating you're going to end the year with a $7.6 billion deficit. That's kind of what you carry into the next year. And you have to solve that too, though, because you have to end the next year having addressed both your operating shortfall in 12-13 plus any carry-in deficit. That's why it's $15-16 billion. But that is a one-time problem, right? The carry-in deficit. That's not it. If you solve it, you've taken care of it. It doesn't come back in the next year. So it's a one-time problem, and it is appropriate to use one-time solutions to address that one-time problem. And briefly looking at the solutions from the governor, he's probably got something that's comparable to that carry-in deficit in one-time things, like special fund borrowing, or a deferral of Medi-Cal, things that only get you one-time savings. But that's appropriate. I think sometimes people say, well, using one-time solutions is somehow a gimmick. Well, it's not a gimmick at all if you can achieve the solutions. Now, there can be consequences down the road. If your one-time solution is, for example, a special fund borrowing, you have to pay that back in subsequent years, and so that will make your problem worse in those years. If it's simply just a one-time, you take monies from a special fund because you can and use it on a one-time basis, it doesn't hurt you in the out years. Those are the kind of one-time solutions that are best.
Do you see any bricks out of the wall of debt in the governor's budget?
You know, that's something that we will look at more next week when we look at the out years, Michael. So kind of hard to say right now.
Can you talk a little bit about the furloughs, the state worker furloughs? Well, I'm sorry, they're not furloughs, excuse me.
Not the F word.
No F word.
No
F word. No F bombs in this room.
Yeah, you know.
Are they furloughs for one thing? And,
well, the language suggests they could be, but the administration has made it clear that that's not their preferred course of action. We do talk a little bit about that in the back of the document on the employee comp, and we acknowledge that it's very difficult to get, say, you don't have easy savings solutions in the employee comp because typically you need to bargain those. And so that if you get savings in the short term, you typically have to give up something and maybe it costs you in the longer run. So it is difficult. The work week proposal, the shortened kind of 4.9½ proposal the governor's put on the table, is an interesting one, but he's acknowledged that it would have to be bargained. So we'd have to see what would come out of that.
What kind of options do you think they really have for the 24/7 institutions? And we saw what the mess it created with corrections before.
Not a lot of good ones, I guess. A personal leave program, as we've done. Jason, anything else practically for the 24-hour institutions? Not a lot of good options for them.
Can you think, do you think, given that you have a lower estimate for the RDA and talking about the very volatile projections for the coming year, should either the cuts or the triggers be even larger than what the governor has?
Well, I mean, that's a really tough one, and this comes up when people ask about how big the reserve should be. The reserve is for when it's raining and it's pouring out there. So it's not the time when you want to build up the reserve, but we've always talked about it in terms of if you have realistic budgetary solutions, if you have confidence that they can be achieved and they can get the amount of savings that you've projected, then we don't see the need to have a huge reserve. This is not the time when you build it up. If, on the other hand, you have lots of risky assumptions, clearly the bigger the reserve, the better, because that helps offset the potential downside risk of many of those solutions not coming to pass.
So you would address it in the reserve as opposed to having...
That's one way. I think we would say you don't need to have a large reserve if your solutions are reasonable. You have confidence that a reasonable amount of confidence that you can get the solutions that you've identified.
Right, so do you think that his cuts or triggers should be larger?
Well, that's a tough one. We have identified areas like the redevelopment where we think there is risk, and so our advice is really to the legislature. When you put together your budget, take those things into account. And you can do one of two things. You can either adopt a different estimate of what you think your solution is on redevelopment. If you don't, it would necessarily speak towards having a larger reserve than otherwise.
Just Facebook, and
sure.
I know there's a little bit of difference between you and the governor. So
not much.
Not much, but how did you arrive for it, and how much do you think that'll help the state budget, et cetera?
Well,
you
know, when they had announced a range earlier of it was between $28 and $35, as we had made our assumptions, and Jason and his crew did an amazing job. They had picked $38, and it turns out that's what it went out at. Whether they were good or lucky, I don't know. We'll have to figure that out later.
Insider.
But these are just assumptions. We weren't really trying to predict so much as just what is reasonable for us in trying to determine how much revenue that might come in. And as we said in our post that we did earlier this week, the more important number probably is the Facebook stock price in mid-November, when you have a lot of other people who will be cashing out or realizing gains on it. So, for example, at that time, if it's at 45, at what we estimated, our revenue estimate should be pretty close. Should it skyrocket? Should it go up to 60 or 65? There's a big upside with more revenues that could come in. And if the converse is true also. If the price is less than 45, we would expect somewhat less money in that situation. So it's just another one of those big unknowns in trying to do our revenue forecast.
Why do you
What do
think
you
those?
apply it to, though? What do you apply it to? How does that work with the state budget? And was that a one-time?
It's for the most part, it's one time. I mean, it's realized over a few years for the most part. So we have most of the money. We have about 500 million in the current year. We have $1.6 billion in the budget year and about, what, 640 or something in 13-14. That's the bulk of what we would expect to realize in capital gains and other income associated with the Facebook IPO. Clearly, you'll have other gains in the future that would just be built into our normal forecast.
Are you convinced that the people who achieve those gains are going to take them in terms of taxable income?
Well, that's again, we've always identified that. They have to be Californians. We don't know what their tax strategy, tax minimization, tax avoidance strategies are, whether they set up foundations, they delay the sales, they have other, strategies. So that's just another unknown.
Is it at least conceivable that were the governor's tax package to pass in early November, they would be less willing to take those gains?
Well, you have two maybe contrary things at work. With higher rates, and especially with the federal rates that could go up in January, there's more incentive to take them before the end of the year.
If in fact they go up. We don't know that.
We don't know that for sure, but at some point they're just going to act. If it hasn't happened, they're going to have to act perhaps as they will go up, so there'll be a greater incentive to take those earlier.
Is this kind of business of putting a guess on top of an assumption and adding it to a supposition?
Well, I don't know if it's quite that bad, Dan.
Well, the governor referred the other day to guesstimates.
Oh.
He's making guesstimates.
Sure, we would acknowledge there's large variability around it. We've done our best in trying to make assumptions both about the stock price and about how these would be realized. But yes, Dan, there's huge variability both on the upside and on the downside.
Mac,
Yeah, Jason,
I would
sure.
add the vast majority of the transactions built into both estimates are disclosed as going to occur on a specific date. In other words, there's not really that much in the estimates that are dependent upon individual investor decisions. That still leaves estimates about what the stock price will be, what percentage are Californians, but most of the income related to Facebook in both estimates, it's disclosed in the documents that they will occur on a specific date.
The stock option.
Restricted stock units as well as certain transactions that occurred today.
So, in comparison with the last budget proposals, how do you see these, and are we finally going in the right direction to balance our fiscal situation?
I think certainly if the legislature adopts ongoing solutions that are comparable to what the governor proposes, even if they're not exactly what the governor has put on the table, I think we'll go a long way towards addressing the remaining problem. Again, we're going to come out next week. Because our out-year revenue numbers are somewhat lower than the administration's, there could still be a small problem. And there's still some risky assumptions, as we've said. It's not likely that everything, that even if you enact it, you're going to get all of those solutions. You've got the federal government, you've got court cases that can always throw a monkey wrench into that. So we're not sure it completely takes care of it, as the administration said, but there's no question that if they take actions, particularly, and we stress this, ongoing actions, we can put a major dent into our remaining operating problem, budget problem.
Yeah, the governor proposes $1 billion reserve as part of his solutions, as you know. There's a lot of talk in the legislature in the last few days, even among the leadership, such as Steinberg, about using that reserve to mitigate the spending cuts that otherwise have. What's your view about having that reserve or any reserve?
I think what I've said in the past, Dan, is that this is not the time you build it up. This is what you use a reserve for during bad times. But it has to be related, as we talked about earlier, to your assumptions that you make on your various solutions. So if the legislature, in assessing the governor's proposal, makes very careful assumptions about the amount of solutions that they're going to attribute to those proposals, and they're very careful, we wouldn't have a problem with that ending up with a lower reserve.
Now, is this a more conservative budget than you've seen in recent years? I mean, just from where I sit, it looks to be very conservative. Not a lot of, at least this revise doesn't look like something that's, resting on a lot of hopes and promises.
I think we can break that down in a couple ways. Let's start with the revenues, which has been a source of a lot of concern by people. And as we say, we're right in line with the administration as far as the total amounts. So at least as of this time, we would say that's nowhere near the same kind of risk that we had last year when there was this last-minute assumption about the $4 billion on top of what had been forecast by both the Department of Finance and my office. So you don't have issues like that, and I think that's a good thing. On the expenditure side, I think the governor's proposals, again, generally speaking, the estimates that he's assumed are reasonable, but you do have certain areas where we've identified some pretty significant risk. We talked about the redevelopment. In February or earlier on, we talked about, for example, the assumption on the use of cap and trade revenues to offset general fund. He's counting on $500 million. We can only find, and the administration has really not identified more than about $100 million of what we might be able to actually offset. So there's risk in things like that. So I think it's pretty good in answer to your question, but certainly some risks remain, and this is what we're trying to call to the legislature's attention.
So can you talk about the overall size of the deficit? So my understanding from redevelopment, that could be $900 million increase in the deficit.
But yes, increasing the problem.
In
exactly.
12-13. And then you're talking about a few $100 million under, about $400 million under the governor's revenue estimate for 12-13.
If they were to adopt our revenue numbers, it'd be about $500 million for both years.
For both years combined. So we're talking about more than $17 billion problem at this point.
Oh, yes, if they were to adopt both of those.
And there were no other changes in estimates of expenditures for programs, which we haven't really looked at completely yet. When there could be lower expenditure estimates, which we've not had time to fully evaluate.
Okay. So I mean, roughly, we're talking about maybe more than a $17 billion problem instead of a $15.7 billion problem.
Under those assumptions that you stated.
Right, under the assumptions that you made in the report.
Well, the legislature picks the revenue estimates. We've
Right.
given our best numbers. If they went with our revenue numbers,
Right.
if they were to go with our estimates on the redevelopment, yes, we would be around that, about 17 billion.
Can you talk a little bit more about why you think the redevelopment money is less than the governor says? I mean, is it that there's less money in the bank accounts of these redevelopment agencies the administration thinks, or just because of how that money could be distributed?
It's primarily because the obligations that are being reported by the local governments, and these are a variety of things, they get to be offset against the amount of tax increment money that's available. And the numbers of these obligations, these ropes that you may have heard about, is much higher than what I think people had assumed. And even though finance is going in and trying to make sure that the appropriate amount of obligations are being reported, we're concerned that they're still going to be much larger than expected.
What are these obligations? Like what types of things is this?
They could be, well, Mary Ann helped me to chime in here, they could be commitments that they've made on various projects in the district. They could be loan payments, other things, Mary Ann.
Bond payments.
Bond payments, obviously, is off the top, but other types of contractual arrangements.
So basically, if a redevelopment agency says we're going to put X amount of money into this project, that money may still need to go there before the administration can grab the money.
That's right. That the whole point of this was to identify what are appropriate obligations that can be offset versus things that are questionable and could be challenged.
Okay. So basically, just to make sure I understand, so even though the administration says they want $1.4 billion in 12-13,
that's the asset side,
right.
Kind of liquid assets. We were talking about the tax increment first. This is, the redevelopment agency's got what is called tax increment property taxes. It's all the money that came into the area. And then you have to offset these obligations and various pass-throughs and administrative costs. What's left out at the bottom is what we assume would come to the state. It would go out to all local governments, counties, and special districts, and to school districts, but the state, in effect, would realize savings from that. To the extent that these obligations are larger than we thought, there's less left that will flow through to schools and be realized as state savings.
So we're not subtracting this from the $1.4 billion.
That's a different issue.
So you're not questioning the $1.4 billion.
Well, on the 1.4, the question there is, can we get these assets in 12-13? Are they going to be as large as what finance and the administration are estimating? It's possible that they could be. But these are more liquid assets. These could be housing funds and other assets that the redevelopment agencies have that are supposed to be reported and in effect turned over to the state.
Okay.
And there's a lot of legal issues about what's tied up, what's properly reported. And the main issue here is that we ended redevelopment agencies and we expected to go through this kind of process of determining whose assets are whose in such a compressed time period. We're still going through that. There's just a lot of uncertainty how it's going to play out.
Could we revisit 2006? I think that was the last time we got a big bump from a Silicon Valley tech firm. Was it Google?
I don't know when Google was. Jason, does that sound about
206.
Yeah,
There was a large amount of money that was paid in April that was not expected that day.
Right. So, I mean, what does that say about our budget having to depend on, you know, these Silicon Valley companies and people who are rich and up and downs? I mean, it's...
Well, it certainly adds to our volatility. And so the question is, you don't want to turn down the money, do you? So the question is, if you're going to you have to live with the volatility of your revenue structure, and you have to take actions accordingly. And the best one is, of course, in our view, to establish a very strong reserve during the good times. And to, when you have these kind of one-time gains, to make sure that you don't have spending or tax reduction commitments that are ongoing. So make sure you have your one-time actions that match with what would be a one-time gain. So you can either budget for that volatility. If you don't think you can, then you need to go into your revenue system and change it to reduce the level of volatility.
Mac, I have a legal kind of question here, make sure I understand it right. We talk about the triggers as being a foregone conclusion, but doesn't the legislature, as part of the budget process, have to agree to this whole trigger plan?
Of course,
So
absolutely.
So they can still nix the whole triggers.
What do you mean afterwards? After?
No, I mean not after.
Oh no, going into the budget, they can take whatever approach they want. They could do, as Dan was asking earlier, do they just do a budget assuming that we don't have the money? Of course they could do that. They could do the triggers, but they could do a whole different set of reductions than what the governor's proposed.
But if once it's in process and they approve the budget and they set up the guidelines for the triggers, can they change that process after the fact?
Well, the only
And what
issue
would
here
it
is
take?
with relation to the RANDs. Jason, do you have any comments? You're asking.
I mean, legally, can they go back into the budget, let's say the ballot measure fails?
Right, can they go back in at that time?
Can they go back in and say, no, we're not going to do the triggers on schools, we're going to cut this and this and this?
Now, Jason, you have a take on that one?
Likely, yes, but investors and rating agencies might have a negative opinion based on what happens at, what the alternative decisions are. But in theory, yes.
Well, I mean, for example, Michael, what if we get to that time and it looks like revenues are doing better? Or some spending is less, so that we're better off and we didn't need to do as much. I think that the investment community would take those things into account. Or if the legislature went in and said, well, we're not going to cut this, but we're going to cut something else of a comparable amount. I'm not sure then you would have a concern, but I mean, it's an interesting question. You do have these RANDs that have been issued with the understanding that you would have taken actions to help ensure that they're repaid later on in the year. And so what Jason's speaking to is, well, you wouldn't want to mess too much without coming up with something similar to what you had committed to.
But that's a financial question, not a legal question.
I guess at this point,
Based on what law is today, yes. The legislature has the power of the purse. So unless some law is passed to come up with a different arrangement with the triggers, then the legislature does have that authority.
Nick, do you agree with the governor's assessment of the three sources that led to the increase in the deficit?
well,
Commissioner
they were.
revenues, the courts, and the federal government waivers.
Yeah, I think those are pretty good ones. The revenues is the largest by far, but clearly we did lose solutions because of these different parties that, outside of kind of our control. The federal government turned us down, in particular on Medi-Cal reductions, and the courts on other things, also on Medi-Cal. So I think that was a reasonable take on why the problem had worsened since passage.
And the carryover, the original amount, I mean, what is that? I think you probably addressed that back, but I don't know if you can go back there.
You mean the deficit that we expected?
The 9, yeah.
Boy, I don't know, Jason, I'm not recalling. It was certainly, when we did our November report, I think we had a $3 billion deficit, so it grew by about 4 on the governor's take. So that would have been his recognition of the revenue situation, and then some lost solution that would have occurred since we did our November report now.
Mac, is there anything, and I don't know if you guys looked this far ahead, in talking to the governor the other day, he seemed to indicate that he thought that revenues were going to get better towards the end of the year. Maybe not in time for the election, but maybe after that. Because he said it's going to get better, and then he says, oh, well, I hope it's going to get better. And it just almost seemed like he knew something that maybe the rest of us didn't.
I'm not sure I can help you out there.
Well, I mean, do you have it? I mean, do you guys? I mean,
Our
do you
forecast
crunching
is,
numbers. Is our forecast?
Oh, no,
that?
our forecast is reflected in our numbers, and the administration's made revision. Their forecast assumes, growth in the economy, just as we did. So when he says he expects it to get better, presumably that's reflected in their forecast, just as it is in ours. So I'm not sure if he's suggesting there may be upside to their forecast. I'm sorry, I didn't hear his comment.
Is there upside to your forecast?
Oh, absolutely. As we said, there's always, it's a mean estimate. And what that suggests is that we could be wrong by 2 or 3 billion easily on either side. And over time, you would hope that there's no bias in your estimates, that you're wrong on the high side, you're wrong on the low side, and they tend to offset over time. So obviously there's upside and downside in both of our forecasts. And so I don't know if he's suggesting through his comments that he felt there was more upside in their forecast or not. I'm sorry I didn't hear his comments.
Well, I was just asking for some sort of, comparison to your numbers, and you've answered the question. It could be wrong either way by 2 or 3 billion.
Yeah.
Mac, would you plan to do anything new numbers on our loss solution by inaction by the legislature to make the cuts that were recommended initially?
The governor's budget already incorporates most of those, or all of those in.
And you agree with his estimates?
Again, we're looking at that, and when we come out next week, that
Okay.
might be part of it, but that's the kind of things we look at, whether we think he's taken into account enough of those. But the budget has tried to already work that into their problem definition.
And you have no major disagreements?
Not
with
at this
his
time,
numbers
but we're
at this
still,
time?
obviously, we're still looking at a lot of things.
Yeah.
We've been talking with the administration. He has, some caseload savings in Medi-Cal and HSS. There's certainly some indication that in fact is true, that they're down, but we're still talking with them, so we're exploring those. Anything else? Thank you very much.